Palantir is up 45% in the past year, and in this video, I am going to do an in-depth analysis of the company by looking at the financials, the balance sheet, and using my Google Sheet to calculate the intrinsic value of the company. Starting with their financials, their revenue has grown consistently from $900 million to $2.3 billion currently, and analysts are expecting them to reach $5.9 billion in 2028. They have been free cash flow positive since 2021, and it has grown from $321 to $697 million. Regarding net income, analysts are expecting them to reach 68 cents per share in 2028. If you assign a 30p to the company then, it would make it a $20.4 stock, meaning negative 14% returns. Moreover, their US commercial revenue grew by 40%, their customer count by 42% year over year, and they closed 87 deals of at least $1 million last quarter. In conclusion, it is clear that their fundamentals continue to improve each quarter. Then, in order to calculate the intrinsic value of the company, I used my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. These three numbers are the intrinsic value according to net income, and these three according to free cash flow. They mean that in order to make the desired annual return that I have put in, you need to pay these prices. I went with 13% because you can get around 9 or 10% investing in an ETF. Therefore, if you take the risk of investing in an individual stock, you should desire a higher return. Moreover, these numbers mean that if the low assumptions occur, you're going to make a negative 3% annual return on your money, middle positive 7.5%, and high 18.5%. For my revenue assumptions, I went with 18% annual revenue growth on my low, 24% on my middle, and 28% on my high. I assumed that their profit margin and free cash flow margin over the next 7 years would be at an average of 25% on my low, 35% on the middle, and 45% on the high. They haven't achieved 45% yet, but their gross margin is around 80%. Therefore, I believe this is perfectly achievable. I assigned a PE and price to free cash flow at the end of the 7 years of 20, 25, and 30, and left the share outstanding change at 0%. However, they have been consistently issuing shares, and if we assume they continue doing it, let's assume they issue 2% of their shares each year, the valuation becomes less attractive. However, the spreadsheet does not attribute any value to the balance sheet, and Palantir has an amazing balance sheet, as they have $3.8 billion in cash and only $200 million in debt, which is essentially nothing for a company that has a market cap of $50 billion. In conclusion, I believe Palantir is a fantastic company that is improving its fundamentals. I would like to own the company, but not at current prices. The share dilution is a concern and the valuation looks expensive. The price you pay for a stock will determine your future returns, and I am personally interested in around $15 per share. I hope you found this video valuable. Let me know what you think about Palantir in the comments, and I'll see you in the next one.